Hey everyone, welcome back to Upside Down Data. Well, things have been getting quite exciting for Bitcoin, so I wanted to jump on here, talk about where we are and where we might be going based on the data. So first, just looking at the Bitcoin price chart, we can see that we've actually gone ahead and broken above that wick that we had created back on the 14th of March, currently trading at 26.6K as I record this. But what's more impressive and more useful about where we are right now with the price is where we are relative to some important levels for Bitcoin. So I've just put on the 200-week moving average, and this is a moving average that people pay a lot of attention to. Acted a strong resistance up through here. It's where we got rejected from, going all the way back down into the 19K range. And now we've shot up and actually been able to break through it. And I think this is going to be a really important level for Bitcoin to reclaim. You know, the 200-week moving average has some history to it. You know, it oftentimes used to act as strong support during bear markets. We'd often bounce off of that. You know, that would mark the low point when you get to the 200-week moving average. This time around was actually different, that we dipped below it and we stayed below it for quite a long time. But now if we can finally get back above it and actually maybe turn it back into support, I think that would be a really strong sign that the bulls are in control and we might have further room to the upside to go. What I would not like to see is another one of these wicks today, and especially not to see us start closing back down below it. That could start looking like another rejection. But if Bitcoin can close up here, and especially if we can get a weekly close above the 200-week moving average and then kind of continue that trend, that's going to be a pretty strong sign, I think, that the bulls are in charge. And if we just look at the other moving averages that tend to be important, we've kind of cleared above a lot of the other ones that are important. You know, the 20-week moving average is all the way down here. It's actually a level that we just about bounced off of when we went down on that low there. The 200-day moving average is also down here at around the same point that the 20-week moving average was at. If we look at the 50-week moving average, we're also above that. So really, after we've cleared through this, a lot of those kind of moving averages that could act as resistance, we've already cleared above them. And that might mean that there's some sky ahead for us to go and move up. So what I want to talk about next then is where might that sky be? And so first I want to flip over to our website, polaritydigital.io, that we've launched in collaboration with Jay over at Daily Crypto Analysis. And so what I want to talk about here is the risk models that we have, the upside downside potential indicator. I want to talk about the long term first and then the short term. So if you're not familiar with these models, these are our risk models, and they do a really good job of identifying overbought points or high risk points when the market's probably at its peak, and low risk points when the market is likely near a bottoming point. And I think, you know, at this point, sometimes when people look at it, it kind of goes without saying, or it's just kind of expected. But this model is pretty remarkable at how accurate it is. I mean, just look at this. It nails the bottoms of these different bear markets perfectly, and it also is nailing the tops of these different points. And so I think looking at this indicator can give us a lot of valuable information. It's done very well in the past. It seems reasonable to take what it's saying seriously going forward, or at least think about what it's saying in a more deep manner. And so what I want to talk about is what might we expect, and what might we think could happen if this rally can continue. You know, if this is a breakout above, you know, that 25K resistance that I've been holding for so long for Bitcoin, what might we look for? And, you know, I know we've talked in the past about the analog to 2019. Now, obviously, if we just look at the price action here in 2019, we can see that the current price action is different, right? You know, it's clearly not exactly the same. 2019 was a lot more aggressive. Now fast things developed, where here we kind of had a big move up, kind of consolidated sideways for a while, and now are potentially breaking out to the upside. But the possibility of this being a more kind of extended 2019 is still potentially in play. And so if that were to play out, what I might look for is this kind of 2 level on the long-term UDPI maybe acting as that resistance point. Because this level has actually been important in the past at these kind of mid-cycle tops, or you know, kind of midway tops, not these kind of big mania blow-up tops like we have here, and here. And even with this, like, even though we technically put a new all-time high back here in November, I still really consider this to be kind of that big mania top that we had in early 2021. And this was more of a kind of double top move before moving in here. And so if we just look at it, you know, 2 was the top back here in 2019, so 2 on the long-term UDPI, 2 was kind of roughly where we topped out throughout here. And then also in this kind of intermediate peak back here in 2013, a little bit above 2, but in the kind of 2 range was again where we found that resistance. And so if we were to shoot off to the upside, that might be one target I would look for. It's been important in the past. As we get to that, if we got to 2, I'd start to get a little bit skeptical. Because again, I'm not in the camp that thinks that we can just go straight back to all-time highs right from here. I just don't think that's very plausible, that we can just go from the depths of the bear market straight to all-time high in a super short amount of time. I think it's going to take more time for things to develop. That's going to be one level that I'm going to be watching. And we look at the short-term UDPI. So the difference here is that the long-term cares about moves that play over months to years, so much more macro in its focus. Whereas the short-term UDPI is reactive to moves that play out over days to weeks, so much shorter term in its time preference. And what we can see is that short-term UDPI has really cooled off more recently. If I just zoom in here, we're down at about negative 2.5 today. And that's a far cry from where we were just back over here at kind of this, roughly kind of the local top before we then ultimately went down to correct, where we've gotten all the way up to about 1 on the short-term UDPI. And so basically what that means is that we have a lot of room to the upside. So again, if we just go back and look at 2019 as an example, again, this is more aggressive, but we kind of put in this double top kind of pattern where we got up to a bit above 1, got up there again, and then that was the ultimate top. I'd be looking for potentially similar things to play out here as well. Or maybe on the short-term UDPI, if we really rally hard from here, maybe even get up to the 30K level or somewhere in that ballpark. You might see the short-term UDPI start to move up, and by the time it gets to around this level, I might start getting a little bit more cautious. Because you can just see, oftentimes that has acted as resistance in the past, that rough level. And so if we get closer there again, I might think that that might be a time where in the short term, Bitcoin's likely to start getting overextended and maybe some more pullback from there is possible. So I want to also talk more about this 30K idea. It's been thrown around a bit on Twitter. I just mentioned it. Why am I talking about 30K as being a possible point where we might hit some resistance? Well, I think the most useful way that we can look at this, or one of the most useful ways, is look at on-chain data. So what I'm showing you here is the distribution of cost basis across the entire Bitcoin network, basically. This is the realized price distribution of Bitcoin. So basically, realized price is the price of a Bitcoin when it was spent. And so if one person is spending the Bitcoin at that level, someone else is buying it at that level, and that becomes that new buyer's cost basis. And the reason that cost bases are important is they often can act as support and resistance. The closer price is to when you bought the asset, the more sensitive you are to price movements around that asset. Prospect theory, this is a psychological phenomenon. And so given that, what can often happen is that if people were at a loss and price is coming back to the cost basis, they might just choose to sell at break even to recoup their money and not risk it going down again. If price was above and coming back down to the cost basis, they might step in to defend it, or maybe even be paying a particular attention to what's coming back. And who knows, if they saw it as a good value the first time they bought, they might actually buy more. So you can act as support or resistance depending on which way you're approaching with price. And so what we can see right now is that when we just look at the distribution, so I've excluded coins that are less than a month old, or rather I've excluded coins that are less than 3 months old, because those are kind of shorter term holders who tend to move their coins a lot more rapidly. It's less likely for their cost basis to be as meaningful. Really longer term holders is who I'm going to focus on here. And what we can see is that really once you get beyond 25K, there's only a tiny bit of Bitcoin that was sitting there for longer term holders. Really, at 26.5, there's a little bit. We're slightly above that now. The next place we see some spike is 27.5, so maybe there'd be a bit of resistance there. But it's really once you start getting into 29K, 30K that you start to see a bigger kind of distribution of coins that sit here, a bigger number of coins that are sitting in that general area. And so what you might see, as if this rally continues, if Bitcoin continue moving up in price, is that we kind of slice pretty quickly up to around the 30K level, and then it might become more of a slog. Not just for these cost basis reasons, but also, if we just go back and look at TradingView again, there'll just be some technical resistance that should happen also. People are going to be looking at these levels down here as probably levels that could act as resistance, again, if we get back to them. But it would not be shocking to me at all if this rally can continue for us to be able to kind of quickly move up into those areas in the not too distant future. Not to say it's going to be a vertical line. It could be some pullbacks, et cetera. But making our way up there is not unreasonable, because there's not really a lot of activity that's happened on the network between those prices. There's not a whole lot of reason to think there's necessarily a super strong resistance there. Obviously, if narratives change or things like that, that could create headwinds that stop price from moving up. But barring any of that, I think this is looking pretty favorable for those kind of prices. Again, assuming that we can, first do things like show that we can turn the 200-week moving average into support and some of those factors as well. So then to wrap up, really kind of what I wanted to mention here is that this is I think this is an exciting time for Bitcoin. And what's really nice is that its risk profile, if we just look at the short and medium term, it's still pretty low. And so there's quite a bit of room that's plausible to think that Bitcoin can move to the upside. And when we combine that with this on-chain knowledge, that there's not likely to be all that much resistance until we get up into closer to the 30K kind of level. And, especially if we can continue to do things like hold that 200-week moving average as support, I think having a bullish kind of bias on Bitcoin right now is very reasonable. And there's a lot of room for it to move back up to the upside. So none of this is financial advice. You should look at the data for yourself, make your own opinions, do what you think makes the most sense to you. I'm not telling you what to do here. But my personal opinion based on the data is I think that upside is quite plausible from here. And it would not surprise me if we can get back up to these levels. Nothing's guaranteed, but that is kind of the next target. And then once we get up there, that's where I think reevaluating the data is going to be important. Looking at where are the risk levels? How is price reacting to those levels? Does weakness start to show up? If that happens, it might be plausible that that could actually act as resistance that we might get rejected from and have to move back down. And then, hopefully hold one of these lower levels as support again before, if the rally is able to continue itself, move up from there. Or in the worst case scenario, have to come down even further. But I do think before any of that happens, my current base case is that up is probably the path of less resistance than down. Time, of course, will tell. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there. And also make sure to go check out polaritydigital.io. Leave a link in the description. You can see the data for yourself.